Back to our channel. So today in this video we're going to discuss test 7 of CA with current test series, and the chapter covered here is material and employee cost. Okay, so in the first question they have given that Anil Limited uses 6 kg of material EXE to produce one finished unit of product EME. Means for one finished product of EME we require 6 kg of raw material of EXE. Fine. Then they have given that the current demand of product EME is 16,000 quarterly. So if it is 16,000 quarterly, then for whole year it is 16,000 into 4 into how many raw materials we need over here? It is 6 kg. So 6. So this comes out to be 16,000 into 4 into 6. It is 3,84,000. Okay. 3,84,000, and then they have given that 1 kg of material EXE cost 40 rupees. So the purchase price of raw material is 40, and then the cost relating to quotation, documentation work, employee cost directly attributable to the procurement of material, and every time the order is made is 2,000. So here the ordering cost per order is 2,000, and then the cost of fund invested in inventories, cost of storage and insurance cost etc. is estimated to be 15% per annum of average inventory. So this is carrying cost. So how we will be calculating the carrying cost? It is purchase price into whatever the percentage they have mentioned in the question. Okay, so 40 into 15%, it is 6 rupees. So the carrying cost per annum per unit is 6 rupees, and then you are required to calculate economic order quantity for material EXE. And second question is, comment, should ANI accept an offer of 2.5% discount by the supplier of material EXE if supply of annual requirement of material is made in 4 equal installments? So first we need to calculate economic order quantity, right? So what is the formula of economic order quantity? It is 2 into annual demand into ordering cost per order upon carrying cost per unit per annum. This for this I have a memory technique, which is for let me tell you the memory technique. It is दोनों के दोनों आ जाओ, open, challenge, काट दूंगा, घर में घुसकर, which means दोनों के दोनों, 2 आ जाओ, A for आ जाओ, okay, and O for open, C for challenge. दोनों के दोनों आ जाओ, open, challenge, काट दूंगा, so divided by घर में घुसकर. So inside this square root. So घर में घुसकर. So with this memory technique you can easily remember the formula of economic order quantity. What is the formula? Again, दोनों के दोनों आ जाओ, open, challenge, काट दूंगा, घर में घुसकर. Okay. So with this, let's solve the question. So what is it? 2 into what is the annual demand? It is 16,000 quarterly. So 16,000 into 4 into what is the raw material we required for one finished unit? It is 6. So into 6 it comes out to be 3,84,000. So the annual demand is 3,84,000 into what is the ordering cost per order. So every time every time the order is made, it cost us 2,000 for per order. So it is 2,000 upon carrying cost per unit per annum. So for 1 kg of material the purchase price is 40 rupees, and here it is given invested inventories, cost of storage, insurance cost, this all relates to carrying cost, and it is estimated 15% per annum of average inventory. So this is 15% of the purchase price. So 40 into 15%, simple, always just take the purchase price into whatever the percent they have given in the question for carrying cost per unit per annum. Okay, so this comes out to be so it is 2 into 3,84,000 into 2,000 upon 40 into 15% is 6 divided by 6 whole root. So it is 16,000. So what is EOQ? EOQ is 16,000. And what's the second question? The second question is comment, should ANI accept an offer of 2.5% discount by the supplier of material EXE if supply of annual requirement of material is made in 4 equal installments. Okay, so now they are giving us 2.5% discount. So should we accept it or not? So let's calculate that. Okay, so particulars at EOQ, what is the ordering level? It is 16,000 units, but whereas at 2.5% discount, it is made in 4 equal installments. So 4 equal installments in the sense, what is the annual demand? Annual demand is 3,84,000 divided by 4 installments, so it comes out to be 96,000. So here the ordering units is 96,000. Okay, so what is the purchase price per unit? So purchase price per unit, if we order at economic order quantity itself, we're gonna get the purchase price is 40 itself. Okay, so it is 40, but if we order in 4 equal installments, we're gonna get 2.5% discount. So 40 minus 2.5%, it is 39. So the purchase price, total purchase price is going to be 3,84,000 into 40. It 1,53,60,000 for 96. Sorry, if the units is 96,000, then it is 39 because we are getting 2.5% discount, right? So the purchase price per unit is 39,000 into annual demand, again it is 3,84,000. So here 3,84,000, so it comes out to be 1,49,76,000. Okay, and next ordering cost. So if 16,000 units is ordered, so 3,84,000 divided by 16,000. So we're gonna make 24 orders. So 24 orders into ordering cost is 2,000 per order. So 24 into 2,000, it is 48,000. And if 96,000 orders is made, then 3,84,000 upon 96,000, 4 into 2,000. 4 orders into 2,000, which is 8,000. And next, after ordering cost, we have carrying cost. So carrying cost is average inventory. So here at EOQ it is 16,000. So 16,000 divided by 2 into carrying cost per unit per annum. So 40 into 15%. This is 6 rupees. So 16,000 upon 2 into 6, it comes out to be 48,000. But here it is 96,000 upon 2 into, here the purchase price is 39. So 39 into 15%, it is 5.85. This comes out to be 5.85 into 96,000 divided by 2. So here the carrying cost is 2,80,800. So now we will total all the cost. Okay, so total cost is equal to 1,53,60,000 plus 48 plus 48. It is 1,54,56,000. Whereas at 96 units it is 1,49,76,000 plus 8,000 plus 2,80,800. So it is 1,52,64,800. So at 96,000 units, we are if we make the purchase in 4 installments with the discount of 2.5%, we are incurring less cost. So it is, what the question is about? They are asking, should any accept an offer of 2.5% discount? Yes, you should accept the discount. Okay. Tesco Cycle Limited uses about 3,60,000 cycle locks per annum, and the usage is fairly constant at 3,000 per month. So here A, annual demand is 3,60,000, and then what have we given? The cycle cost 240 each at wholesale rate, and carrying cost is estimated to be 10% of annual average inventory. So the carrying cost per unit per annum year it is 240 into 10%, so it is 24 carrying cost per unit per annum. Okay, and then they have given that, what have they given? Yeah, the cost to place an order is 1,200, so it is ordering cost. It takes 45 days to receive delivery from date of order, so average lead time is 45 days. And in order to avoid any kind of disruption in assembly line, safety stock of 6,500 cycle locks is always maintained by Tesco Cycles Limited. And then assume 360 days in a year and compute EOQ, reorder level, and company. The third question is, the company has been offered a quantity discount of 2% on purchase of cycle locks provided order size is 30,000 units at a time. Advise whether quantity discount offer can be accepted or not. Okay, so now let's solve this question. So first question is EOQ. So EOQ is equal to दोनों के दोनों आजा ओपन चैलेंजे काट दूंगा घर में घुस. So 2 into what is annual demand? Annual demand is 3,60,000 cycle locks. Okay, so 3,60,000 into what is the ordering cost per unit? It is ordering cost per order is 1,200. So 1,200 upon carrying cost per unit per annum, it is 240 into 10%. So it is 24. So 2 into 3,60,000 into 1,200 upon 24 square root, it is 6,000. Done. And what is second question? What is the reorder level? For reorder level we have too many formulas. So among too many, we're gonna select which one for which we have information. So the one which we're gonna use right now, it is safety stock plus average usage into average lead time. So what is the safety stock they have given? They have given that 6,500 cycle locks is always maintained. So safety stock is 6,500 plus average usage. It takes 45 days to receive delivery from date of order. So average lead time is 45 days into average usage. What is average usage? Average usage is 3,60,000 cycles, and how many days are there? 360 days. So 3,60,000 upon 360, it is 3,60,000 upon 360, so 1,000. So average usage is 1,000 cycle locks. So this comes out to be 45 into 1,000 plus 6,500, which is 51,500. So we are done with the second question. And third question, quantity discount of 2% on purchase of cycle locks provided order size is 30,000. So we're going to get a discount of 2% discount if the order size is 30,000. So should we accept it or not? So let's solve. Okay, so the third one is particulars, and if at EOQ it is 6,000, but if it is at discount, then the number of units is 30,000. So purchase price per unit is, if we don't gonna get a discount, then it is how much? 240 rupees each. But if we gonna get a discount, then it is minus 2%. So 240 minus 2%, it is 235.2. So 235.2. Then the purchase, what's the total purchase cost? Purchase cost gonna be how much units? Number of units is 3,60,000. So 3,60,000 into 240, it is 8 crore 64 lakh. Again 3,60,000 into 235.2, it is 8 crore 46 lakh 72,000. And ordering cost gonna be 1,200. So 3,60,000 upon 6,000, it is 60 orders. So 60 orders into 1,200 it comes out to be 72,000. But if it is 30,000, then 3,60,000 upon 30, it is 12 orders. 12 orders into 1,200. So it is 14,400. And carrying cost going to be, what is carrying cost? So carrying cost is average inventory. Average inventory is 6,000 upon 2 into carrying cost per unit per annum. What is carrying cost per unit per annum? We have calculated it is 240 into 10%, it is 24. So 6,000 upon 2, 3,000 into 24, it is 72,000. In EOQ, always ordering cost is equal to carrying cost, but not at other. So here 30,000 upon 2 into 235.2 into 10%, so it is 23.52 into 3,000 upon 2, so this is 35,280. So the total cost comes out to be 8 crore 64 lakh plus 72 plus 72. It is, sorry, something went wrong. 8 crore 64 lakh plus 72. Yeah, it is 8 crore 65 lakh 44,000. But if it is 30,000, then 8 crore 46 72 plus 14,400 plus 35280. It is 8 crore 47,000. Sorry, 8 crore 47 lakh 21,680. So if we order 30,000 units, then we are getting more profit. So should we want to accept? Yes, we want to accept the discount of 2%. Describe any 5 benefits of digital costing system. It's a theory question. And moving on to the question 4. In the automotive machine manufacturing sector, a component is manufactured. The economic order quantity for the component is 500 units. The cost of placing order is 100, and the carrying cost per unit per annum is 10%. The cost per unit of component is 20%. So what is the carrying cost per unit per annum? It is 10%. So 20 into 10%, it is 2. And then ordering cost, they have given that 100 for placing one order, and what we need to calculate the annual demand. So what we're gonna do? So EOQ is equal to dono ke dono aa jao open challenge kaat dunga घर में घुस कर. So in this we're gonna just take 45,500 as A and calculate with the respective formula. If you don't get EOQ as 1,500, then move on. So what we're gonna get if we take 45,500 as annual demand? It is 45,500 into 100 into 2 upon 2 square root. It is 2,133. So A is not an option. And next 75,000 into 2 into 100 upon 2 square root. It is 2,738. But here it is 1,500. So again B is not the option. And then again 2 into annual demand 36,000 into ordering cost 100 upon carrying cost per unit per annum is 2 upon square root, it is 1897. Again not 1,500. So not even option C. And for option D, we're gonna get 22,500 into 2 into ordering cost per unit per order is 100 divided by how much? Carrying cost per unit per annum is 2 square root. We're gonna get 1,500 for annual demand 22,500. So option D is the correct answer. So next, moving on to question 5. So it is given that in a mutual project, both Raj and Bhuvan are contributing their efforts using identical materials. Raj receives a bonus based on row 1 plan, while the Halsey plan determines Bhuvan's bonus, and the standard time allocated for the project is 150 hours, and Raj completes project in 90 hours while Bhuvan finishes it in 120 hours. The normal hourly wage rate is 30. The total earnings for both workers are equal. So whatever row 1 gonna earn in, Raj gonna earn under row 1 plan, the same amount Bhuvan gonna earn in Halsey plan. Okay. So calculate normal hourly wage rate to be paid to Bhuvan. So what's the formula of row 1 plan? It is or is equal to under row 1 scheme, time taken into whatever the wage rate per hour plus Ratta is a memory technique to find out the wage rate per unit per annum. So what is Ratta? Or for row 1, T for time taken, okay, or TA rata. This is how we're going to remember this formula. So time taken upon RTA. So time allowed. Time allowed means standard time, okay, into time saved into wage rate per hour. So in the question it is given that what they have given, time taken. What is the time taken by Bhuvan? Raj completes in 90 hours. So it is 90 into wage rate per hour is the normal hourly wage rate. It is 30. So into 30 plus time taken 90 upon time allowed. What is the time we have allowed to finish? See, the standard time allocated is 150 hours. So time allowed is 150 into time saved. So time allowed is 150 minus time taken is 90. So the time which he has saved is 60 hours into wage rate per hour. So it is 30. So the total going to be 90 divided by 150 into 60 into 30 and plus 90 into 30. So it is 3780. So the same amount Bhuvan gonna earn under ALSA scheme. This is what they have mentioned in the question. The total earnings for both workers are equal. So even under ALSA scheme, Bhuvan gonna earn the same wages. Okay. So now let's what is the normal hourly wage rate to be paid to Bhuvan? So we need to calculate the normal wage. So under ALSA scheme, what's the formula? The formula is again time taken into wage rate per hour plus time saved into 50% into wage rate per hour. So both of them earn same amount under different schemes. So 3780 into what is the wage rate per hour we need to calculate. So let's take it as x, and what is the time taken by Bhuvan? It is given 120. So time taken is 120 into x plus time saved. Time saved is 150 is the standard time given. So 150 minus 120. So it is time saved is 30 hours into 50% into x. So this comes out to be 3780 equals to 120x plus 30 into 50% 15x. So x is equal to 3780 upon 135. So this is 28. So it's option D. Fine. Then let's move to the question 6. It is a skilled worker in Shanu Limited is paid a guaranteed wage rate of 30 per hour. The standard time per unit for a particular product is 4 hours. So it's the standard time. And Sam, a machine man, has been paid wages under row 1 incentive plan. He had earned an effective hourly rate of 37.5 on manufacture of the particular product. What could have been his total earning and effective hourly rate had he been put on ALSA incentive scheme? So under ALSA incentive scheme, what is his total earnings and effective hourly rate? We need to calculate this. Question is just a study math question, which is illustration 10, right? So now what we're going to do, first we're going to calculate the time taken. So what is the time actually they have taken? Okay, so under this they have given that the effective wage rate under row 1 scheme is 37.5 per hour. So 37.5 into whatever the time he has taken. So for row 1 scheme, I told you Ratta is a memory technique. So or into TA. TA means time taken upon time allowed. So whatever the hours he has worked is time taken into 30 rupees per hour. They have given that guaranteed. It is a it's XYZ Limited is paid a guaranteed wage rate of rupees 30 per hour. So it's a guaranteed wage rate. So hours worked into hours worked into 30 rupees, and time taken we don't know, so we're going to take it as T itself, and time taken upon time allowed standard time, it is 4 hours, and time saved is 4 hours minus whatever the time they have taken, it is time saved into rupees 30 per hour is the wage rate. And under row 1 it is 37.5 into T, time taken. So by solving this whole equation, we're going to get the time taken as 3 hours. So 3 hours is the time taken, and after we're going to get the whatever the time we have taken. So we're going to use this information to find out the total earnings under Halsey scheme. So here it is again hours worked into rate per hour plus 50% into time saved into wage rate per hour. So it is hours worked is 3 hours we have already calculated, and 3 hours into guaranteed wage rate is 30. So 3 into 30 plus 50% into what is the time saved? 4 hours is the standard time. So standard time minus hours taken. So 4 minus 3 is 1 hour into 30. So it comes out to be 105. So CV is working by employing 10 skilled workers. So she has 10 skilled workers, and it is considering the introduction of some incentive scheme, either a Halsey with 50% bonus or Rowan's scheme of wage payment for increasing the labor productivity to cope up with increased demand for product by 25%. She feels that if the proposed incentive scheme could bring about an average 20% increase over the present earnings of the workers, it would act as sufficient incentive for them to produce more, and she has accordingly given this assurance to the workers. As a result of this assurance, the increase in productivity has been observed, as revealed by the following figures for the current month. So hourly rate of wages guaranteed is 2 rupees per hour, and average time for producing one piece by one worker at previous performance, this may be taken as time allowed, that is standard time, is 2 hours to produce one unit, and number of working days in a month is 25 days, and number of working hours per day for each worker is 8 hours, and actual production during the month is 1050 units. So required, we need to calculate an effective rate of earnings per hour under Halsey scheme and Rowan scheme, and calculate the savings of Navya in terms of direct labor cost per piece under above schemes. Okay, and advise Navya about selection of scheme to fulfill her assurance. What's the assurance she has given? Average 20% increase in wage rate over the present earnings. So whatever the present earnings are there, over the they're gonna get 20% more. So this is the assurance she has given. So now let's solve this question. So the standard time over here is actual production during the month is 1250 units. So 1250 into 2, because standard time they have given to produce one piece of unit, we need 2 hours. So 1250 into 2, it is 2500. What is 2500? It is standard hours. Okay, standard hours is 2500, whereas now she'll calculate effective rate of earnings under Halsey and Rowan. Okay, so under Halsey's scheme it is so number of working hours per day for each worker is 8 hours, and there are 25 days. Fine. So 8 into 25, there are 10 skilled workers. So 8 into 25 into 10, so it is 2000 hours. So they have worked here for 2000 hours. Okay, therefore 2000 into what is the wage rate per hour? They have given that hourly rate of wages is 2. So 2000 into 2 plus hours saved. What is hours saved? We have taken 2000, whereas the standard hours is 2500. So 500 is the hours saved into 50% into wage rate per hour. It is 2. So this comes out to be 4000 plus 500. So this is 4500. And under Rowan, it is same again, 2000 into 2, 4000 plus RTA, time taken upon time allowed. Time allowed in the sense it is standard time into time saved. What is time saved? Time allowed minus whatever the time we have taken. Sorry, time whatever we have taken. So time allowed minus time taken into wage rate per hour. So this is 4000 plus time taken is 2000 hours upon the standard time is 2500 hours into time saved is 500 into 2. So 2000 upon 2500 into 500 into 2, it is 800. So this is 4800 under Rowan's scheme. So what is the effective rate of earnings? Effective rate of earnings is under Halsey's scheme, it is effective rate of earnings is 4500 upon how many hours? 2000 hours. So 2.25. Whereas under Rowan it is 4800 upon 2000, 2.4. So first question is done, and second question is calculate the savings of Navya in terms of direct labor cost per piece under the above schemes. So what is her savings? So it is, so they are asking savings in terms of direct labor cost per piece. So what is the standard direct labor cost per piece? It is for 1 unit we need 2 hours, so 2 hours into 2 rupees, so it is 4 rupees. But in Halsey and Rowan scheme it is, so here cost per unit is, it is 4500 upon how many units they have produced, it is 1250, so divided by 1250. So per unit the cost is 3.6, so 3.6. so what is the savings? Savings is 4 minus 3.6, it is 0.4, okay, under Halsey scheme. Whereas under Rowan scheme the cost we are paying is 4800 upon 1250, it is cost per unit is 3.84. so the savings is again 4 minus 3.84, it is 0.16, okay. And then they have given that what's the third question? It is advise Navya about selection of scheme to fulfill her assurance. So what she has said, that she has given an assurance that average 20% increase over the present earnings. So what is the present earnings? It is 2 rupees per hour, so 2 plus 20%, it is 2.4. so at least under a new scheme they should get 2 rupees plus 20% of 2, which is 2.4. but under Halsey scheme we are just getting 2.25, so it is not advisable to select Halsey scheme, but we are selecting Rowan scheme. But in the answer they have made a mistake of selecting Halsey scheme, but the answer is Rowan scheme, okay. So she should select Rowan scheme to fulfill her assurance. Fine. So its question: AXC trader and unregistered supplier under GST purchased material from Y Limited, which is registered supplier under GST during the month of June 2024. The AXC traders has purchased a lot of 5000 units on credit from Y Limited. The information related to purchase are as follows: listed price of one lot of 5000 units is 2,50,000. So listed price 2,50,000, and we're gonna get a trade discount of 10% on listed price, so minus trade discount 10%, so 25,000. so the amount comes out to be 2,25,000. and then they have given that CGST and SGST is at 18%, so at GST of 18%, so 2,25,000 into 18%, it comes out to be 40,500. so the total cost is 2,65,500. Then they have given that cash discount 10% will be given only if payment is made within 30 days. And they have also given that the payment to the supplier was made within 21 days of the purchase. So we're gonna get the cash discount, but we never deduct cash discount while calculating the cost of material. So after getting trade discount, we also gonna get a cash discount. So what is cash discount? It is 2,25,000 into 10%, so it is 22,500, but we don't deduct this while calculating a material cost, okay. So just leave it. And demurrage paid to transporter, it is 5,000. It is like a penalty, so we don't take penalty as well while calculating the material cost, so leave this. Oh sorry, I didn't take toll tax. Yeah, then we're gonna consider toll tax, which is 5,000, and then freight and insurance we're gonna take that as well, 17 to 20. And then demurrage paid to transporter, don't take, just ignore it. And then commission and brokerage on purchases, we're gonna take commission and brokerage. How much it is? It is 10,000. And then amount deposited for returnable containers, it is 30,000, and amount of refund on returning the container, it is 20,000. So first we're gonna pay 30,000, and that we're gonna get a refund of 20,000. So net off it is 10,000. So container cost, it is 10,000. And then what they have given, other expenses at 2% of total cost. What they have given, 2% of total cost. So whatever is the total cost of material, in that 2% is other expenses, okay. And a 20% shortage in material on receipt is expected considering the nature of raw material. So among 5,000 units, among 5,000 units, how much? 20% gonna be the shortage. So total cost, we don't know whatever the total cost. On that other expense cost is how much? 2%. So we're gonna solve this working note number 1. And number of units, what they have given, that number of good units we're gonna calculate. Number of good units is 5000 minus 20% of 5000. So that is 5000 minus 20%, it comes out to be 4000 units. And then working note number 1, calculation of other expenses cost. So whatever the cost we're gonna incur up to here plus this. So 2,65,500 plus 5,000 plus 17,220 plus 10,000 plus 10,000. So until here we're gonna get 307,720. And now, so let's assume the total cost of a material as X. So 307,720 plus what is other expenses? Other expenses 20% of, what is it, 20%? Sorry, it is 2% of total cost. So 0.02x is equal to X. 2 divided by 100, so 0.02, so minus 1, so 0.98. 0.98x is equal to 307,720. So 307,720 divided by 0.98. So what is the cost? Total cost comes out to be 314,123. So 3,14,000 is the total cost. Okay, total cost of a material is 3,14,000. So 3,14,000 minus 307,720 is equal to 6280. So 6280 is other expenses. So we are done with this. So what's the questions? So question 1 is, if AXE traders pays the supplier within 30 days of purchase, then what is the total amount of cash discount received from supplier and how it is treated to calculate material cost? So cash discount we have calculated, it is 22,500, 22,500, and yeah, it will not deducted from material cost. So it is option D. Okay. And second question, what will be the amount of other expenses and how it is treated in material cost? So other expenses we have calculated it as 6280. So option B, 6280, and it will be added with the material cost. Fine. And the third question is, what is the amount of GST and how will it be treated in cost sheet of AXE traders? What is the GST? It is 40,500. So 40,500, and it will be added with material cost. Option B. Next, what is the material cost chargeable in the cost sheet of AXE traders? 3,14,000, option A. And the number of good units and cost per unit of material received. Number of good units is 4,000 and cost per unit is 3,14,000 upon how much good units? 4,000. So it is 78.5. So 4,000 and 78.5, it is option C. So done with 8th question. And 9th question, what are the principles of estimation of costs and benefits? It's a theory question. And moving on to 10th question, it is standard hours required for doing a work is 100 hours and budgeted hours is 120. While the same work is actually completed by workers in 110 hours, you are required to calculate the activity ratio. For this I have a small memory technique, and it is, the memory technique is ACE SAS, or SAS means daughter-in-law or mother-in-law, something like that. Babal, BBAL, SAS, ACE, SAS, Babal. So what is ACE? A for activity ratio, and CE we don't gonna discuss over here, so just leave this. ACE, SAS, Babal. So S for standard hours, which is given in the question, 100 upon, so we're gonna write this SEIS, and BBAL. So for A means activity ratio, standard hours upon budgeted hours. So budgeted hours, have they given the question? Yes, they have given. What is it? Budgeted hours is 120 hours. So budgeted is 120. So 100 upon, for activity ratio, standard hours upon budgeted hours. So it is 100 upon 120, which comes out to be 0.83333. So 0.83333 into 100, it is 83.3333. So which is option B. Fine.